Recently, I invested $10,000 into NIO. Lately, I've been thinking, what? I want more. Hey guys, Corey here. Welcome back. Hope you guys are having a great day. Be sure to subscribe and tap the bell if you haven't already, so this way you guys know when I post new videos. Be sure to give me a thumbs up as it greatly helps the channel grow. Recently, I invested $10,000 into NIO. This was about a week ago, a little over a week ago. However, I already have a pretty big size position in NIO in two different brokerages because I believe in the company, and I'm going to go over some of those things today. And I've been over them before, but a couple of things I didn't quite touch base on. I'm currently sitting on 2,300 shares, which cost me just over $10,000 like a little over a week and a half ago. But I also have 7,500 shares in my other brokerage account, which has an average cost of $7 or like $7.02, which I picked up about a few months ago. So my position in NIO is pretty big. However, I'm feeling like it might be time to add to that position. With the new suspension that NIO has in the ET9 and the infrastructure and the battery swap or power swap, these things show me a very good future and a strong infrastructure for NIO. But there's a lot more to a successful business than just a product that looks really good or has good function. You have to be profitable. And more importantly, there has to be, my favorite, cash flow. Now, I want to explain something to you guys, and other people have brought it up in my previous videos. You see, cash flow is not the same as earnings. You see, you can earn money, but not have cash flow. For an example, if you were running around the neighborhood cutting people's yards in the summer, like cutting their grass, and they didn't have the money to pay you and you had to wait a couple of days, well, you earned the money. You're profitable, but you're cash flow negative because you don't actually have the money. See, cash flow is more important because it doesn't measure the future or what you're owed or what you could owe or what you're earning or what you could earn. What it does show is the money that's coming in or going out that you currently have in your possession. There are plenty of businesses out there that have survived and currently running that are cash flow positive, but they're not profitable. But I bet you can't even find one company long term that's cash flow negative that survives. Cash flow tells us a lot of things. For one, cash flow from operating expenses is basically the operations of the business. For example, in this video, NIO. Operating cash flow, OCF, is basically a metric that shows how much money NIO's making by selling vehicles. So if it costs NIO $100 million to produce a set number of vehicles, as an example, and they sell those vehicles for $140 million, well, then they made $40 million operating income. So the metric of operations cash flow or operating cash flow, OCF, that basically shows you how much profits or losses are coming from the operations from the day-to-day business. Then you have financing cash flow. That is the inflow and the outflow of cash related to financing, such as borrowing money, issuing debt, grants, loans, equity, securities, dividends that are being paid out, repaying debts, and buying back stock. And then you have investing cash flow. It's cash that a company receives from investing activities, such as buying or selling equipment, property. In NIO's circumstances, it could be manufacturing facilities, warehouses, storage lots, land to store vehicles or to build new production centers, investing in securities, investing in other businesses. These are just some of the ideas. But then you have free cash flow. So you look at your operating cash flow, then your financing cash flow, your investing cash flow, and then you tally it up. And if you're left in the positive, that is your free cash flow. This is the most powerful metric when gauging if a business is going to be successful, because if a business has a lot of free cash flow and yet they're not making a lot of net margin or net profits, that means the business has a lot of potential they haven't tapped into. However, if a company is making decent or good net profits, but they're cash flow negative, that means there's something going on with the books, something's not right, something's going wrong. However, you can survive long term not making profits if you're cash flow positive. Because remember, like I said in the example, you could be owed $1 million, but if you can't collect that earnings, you have no cash flow. However, if you collect that $1 million and you owe $2 million in debt, but you don't pay that debt and you're able to amortize it over time, you're still cash flow positive. You're in debt, you're not making profits, but you're still cash flow positive because you made $1 million, you brought $1 million in, but you didn't allow that $1 million to go anywhere. That is cash flow positive. And that's why depreciation and amortization is very important, as well as cash flow. You got to look at EBITDA as well, which is another metric. So in the previous quarter, NIO was like $194 million in the negative for operating cash flow. Their investing cash flow was also negative. NIO's cash flow from investing activities was also like $1.5 billion in the negative due to net debt issuance. Common equity was purchased, and then they had some repurchases. And so they were like $1.5 billion in the negative in investing cash flow. However, cash flow from financing activities, they were almost $3.9 billion in the positive. And remember, financing activities can come from loans, grants, other companies coming in to help financially. They could be issuing debt, borrowing money. And that is the case with NIO. CYVN, a company in Abu Dhabi, gave NIO $2.2 billion. This was in December of 2023, which is very recent. Not to mention the Chinese government has given the money too. So they have like almost $3.9 billion there. By the time you subtract all the negatives from that number, they're left with $2.178 billion in positive free cash flow. What have we learned? That NIO is cash flow positive, but through financing cash flow, not investing and not operations. Typically, investing cash flow is not really something you want to see in the positive per se. In the negative means they believe in their company, they're investing in their company, they are issuing dividends and common stock, stuff like that. They're paying off debt. So you kind of want to see the investing cash flow negative because it means they're paying down debt. So if the investing cash flow is negative, but operations and financing is way up and there's lots of free cash flow, that is good because that means they're cash flow positive. The operations and the financing activities are all good and they're making net profits and they're spending money on their investing, which is good. It means they're paying debt down and they're investing. That is a very good situation. However, NIO is cash flow positive strictly because of financing cash flow. That is somewhat concerning, but not long term. Because of the $2.2 billion investment from CYVN, this gives NIO a chance to have positive free cash flow to put back into their operations so they can become profitable. However, they've got to manage their money properly. This cash flow is not going to keep coming around. They have to utilize this cash flow, tighten operations, and look at it as smart business. If something's not making a profit and doesn't have good enough potential, isn't working, cut it loose. Business is business. They need to focus on making vehicles and focus on battery swap and the suspension. They have to use this $2.2 billion from financing cash flow in order to help attain a positive operational cash flow, which is key to NIO becoming profitable. When I was interning at JP Morgan, this is something that we utilized all the time. Free cash flow and the overall cash flow of the company was so important. It was, in fact, the most important metric that we used. And it was the same thing when I was over at Schwab, the exact same thing. All these guys trading millions of dollars and millions, hundreds of millions of dollars in options, they pretty much all had the same sentiment. And the important metrics were the cash flow. Free cash flow being the main one that everybody looked at, but then you'd want to dive in and figure out, okay, if they're cash flow negative, why are they? Are they cash flow positive? That's great, but where is the cash flow coming from? Is it from financing or is it from operations? And these are things that you have to ask yourself when you're an investor. When you're a day trader or you're just trading on a swing like weekly, these things don't matter as much. It's more fundamentals and the sentiment of the market. But when you're an investor, like 1, 2, 3, 4 years or more, and you really want to grow your investments, you need to look at cash flow. And I'll show you right here, guys, what I'm talking about from investing activities, negative $1.5 billion, negative $194 million from their operating, yet from financial activities, NIO has $3.9 billion just about. Net free cash flow, $2.178 billion. You can see this is the statement. As you can see here, NIO crossed below the 20-day moving average with the 10-day moving average. Comes all the way down, and then right here, Tuesday, April 24th, the 10-day moving average crossed over the 20-day, and that was the 4-hour chart. If you see here on the 1-hour chart, it crossed over right here. You can see that the 10 and the 20 have now crossed over the 100-day moving average, which means NIO, if it pulls back, is going to reject at $4, which means we're going north. We're running with the bulls, baby. So you can see NIO is about to make a run. This is it. I am thinking about getting more NIO, but do I really need more than 10,000 shares at this point? That's the question. So I don't want to put too much of my portfolio into one position. The rule is 1% to 2%. If you really believe in the stock, I could see you doing 5%. I remember back in the day when I worked for Schwab, and I spoke to a couple of associates while I was there all the time about the same thing, and they would kind of frown upon it if you put too much of your portfolio in one position. They weren't really risk takers. The hedge funds and investment bankers, they don't really like to take risks like individuals like us do. They really weren't fond of that. As you guys can see, NIO is actually at 417 in the overnight hours, and it's the perfect time to sell a put on NIO at $4. I showed you earlier that the 10-day moving average crossed over the 20-day moving average, and they both crossed over the 100-day moving average. That's a very strong technical indicator that signifies a lot of resistance and support. And because NIO broke that resistance, it now becomes support. So the chances of NIO in the next 7 to 10 days going below $4 is very low. And considering it's earnings season, it's even lower. So it's perfect to sell a put going out to May 3rd, which is next Friday. We're going to go ahead and sell this $4 put. Click on the put here, and we're going to sell it. So we're going to sell this put for $4, expiring May 3rd, 1 week out. It's actually a week and 2 days. We're going to click continue. We're probably going to try to get 20 for it. $20, pretty good juicy premium on $4, and we'll submit this. And this will give you guys an opportunity to get into NIO for $4 a share or collect $20 juicy premium. Either way, you're going to be good, because if you get assigned, then you're in the positive, because your average cost will be $4 minus $20, which means your break-even price is $3.80. So as long as NIO stays above $3.80, you're making money. So NIO could go up even more, may never go down to $4 or less again. But do I really want to increase my portfolio position to 4 or 5% in NIO when I already have over 10,000 shares and I'm currently at 3.5% of my two portfolios? I think what I'm going to do is probably at some point in the next week, depending on earnings, I'm going to buy more NIO. There's a lot of things that go into my belief in them, and between the infrastructure, the power swap, as well as the investments from Abu Dhabi in the excess of $2 billion, 2.2 to be exact, giving them a positive free cash flow in order to get through the slump that they're in and become positive. Now, while their cash flow from operations is getting better and improving year over year every quarter, with this free cash flow from financing activities, it seems like they have more chance of success now. And that's very recent, since December. And because of this, I believe in NIO even more. Not to mention the new suspension, the ET9, the technology in their power swap, which is critical to NIO because no one else is doing it. And not to mention the world record for longest EV range, which is 1,070 kilometers, or over 660 miles on a single charge. With all of these things combined, not only is NIO a buy for me, it's an absolute bargain. Appreciate you guys being here. Thank you so much. If you guys enjoyed the content, be sure to subscribe and tap the bell so you know when I post new videos. Also, if you're feeling generous, you can give me a thumbs up, as it greatly helps the channel. And until the next video, take care of yourselves. And remember, let's grow our wealth together. Take care, guys.